When US cash closes positive, but all futures barely move overnight after 2 days of relief, is momentum cooling or consolidating? When semiconductors underperformed tech by 144 basis points after leading by 44 basis points yesterday, is growth conviction exhausting? When Korea holds aggressive positioning but Japan loses 200 basis points of conviction from day one, is regional divergence breaking? When volatility barely moves but entirely yield curve rises sharply, is this normalization or growth expectation rolling over? When Tokyo conviction collapses 200 basis points from day one, but Seoul persists, can Seoul hold alone or does execution spread? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look. Let's get into it. S&P 500 closed up 80 basis points. Nasdaq Composite closed up 159 basis points. Dow Jones closed down 15 basis points. That's the first break. 2 days straight of green across all index today. Dow turned negative. Cash closed with momentum cooling. This is the third consecutive day of positive moves, but the magnitude is shrinking. That matters. Here is what happened after the bell. Nasdaq 100 futures repriced to plus 9 basis points. S&P 500 futures to plus 6 basis points. Dow Jones futures flat at plus 10 basis points. Futures barely repriced tonight. That's the first signal, cash momentum cooling and futures offering no follow through. Then Asia saw cooling momentum and Asia repriced lower. Nikkei futures implied up 44 basis points. That's down 199 points from day one. Japan lost conviction. Korean futures implied up 207 basis points. Korea held aggressive positioning but Japan break hard. Shanghai Composite futures implied flat at plus 1 base points. That's down 94 base points from day one. China withdrew completely. Hang Seng futures implied up 29 base points. Australian futures implied up 9 base points. Asia's conviction is fragmenting. Crude oil selling 41 base points. Overnight is a confirmation signal. That signal weakness tells you commodity markets finally see the relief momentum existing. Relief is reaching its limit. Which sectors are getting sold into this momentum execution? Thus, what sector leads confirms. Technology ETF up 160 base points. Semiconductor index up only 16 base points. That 144 base points gap tells you semiconductors are breaking hard. Yesterday, semiconductors lagged tech by 44 base points. Today, semiconductors lag tech by 144 base points. That's 188 base points reversal in one day. That tells you semiconductor demand conviction existed. Institutional capital is rotating out of semiconductors and back into defensive tech names. This is not growth recovery anymore. This is a growth exhaustion. Financial ETF up was 75 base points. That's stronger than day one by day two. Financials rotating is and semis rotate out tells you institutions are finally pricing growth exhaustion. Asia's financial stocks will feel that support when they open because global capital is rotating away from growth into defensives. Healthcare ETF down 71 base points. Material ETF up 29 base points. Industrial Select down 124 base points. Energy ETF down 34 base points. But crude oil selling a 41 base points. Copper down 1 base points. Gold up 14 base points. Commodities holding well, equities fragment tells you commodity markets are pricing growth exhaustion too. Institutions are raising cash, not rotating into commodities. Also need to watch which sectors hold and which sectors break. Asia's regional picture shows momentum exhaustion, hitting hardest at Japan and China. Nikkei futures implied of 44 base points. Japan's conviction collapsed 199 points from day one. Tokyo is barely bidding. That tells you Japanese institutions see the relief existing and are reducing exposure. Korean futures implied up 207 base points. Korea held aggressive positioning throughout day 3. Seoul maintains conviction when Tokyo breaks tells you Korean institutions either see semiconductor bounce or trapped long. Hang Seng futures implied up 29 base points. Hong Kong holding but light. Hang Seng Tech futures implied up 123 base points. Tech positioning holding despite broader weakness. Taiwan futures implied up 117 base points. Semiconductor recovery positioning still there but weakening. Hang Seng Financial futures implied down 48 base points. Hong Kong's financial sector breaking hard. Shanghai Composite futures implied flat at plus 1 base points. China withdrew completely. Shanghai lost 94 base points from day 1 and is now basically at zero. Chinese institutions are selling into the relief exhaustion. Singapore index up 27 base points. Southeast Asia light. Australian dollar up 67 base points. Chinese currency up 11 base points. Yuan weakening tells you China capital is rotating defensive. Volatility index down 103 base points to 18.17. Fear barely moved overnight. That tells you volatility is already normalized. Yesterday's volatility index at 18.36 was already low fear. Today's is 18.17 is lower but move is small. That tells you fear is gone completely. 10-year treasury yield up 47 base points to 4.28. 5-year treasury yield up 65 base points to 3.89. 30-year treasury yield 47 base points to 4.89. 13-week treasury flat at 3.61. The entire long yield curve is rising sharply for the first time in 3 days. That's not relief continuation, that's a growth expectation rolling over. In the past 2 days, yields were collapsing. Today, yields are rising. That shift tells you institutions finally see the growth recovery as existed. Long duration bonds are selling off as a growth optimism phase. That's the real signal today. US dollars index down 7 base points. Yen up 5 base points. Safe haven currencies are holding flat tells you institutions are uncertain. Out not panic, not confidence, uncertainty. Crude oil selling 41 base points is the confirmation. Gold up 14 base points. Copper down 1 base point, barely moving. Commodities fragmenting tells you commodity markets are pricing growth exhaustion. Asia open into exhaustion setup, not growth recovery anymore. Nikkei futures implied up 44 base points. Is Japan's exhaustion signal, but Tokyo lost 199 base points from day 1. If Tokyo opens and extends this weakness, the regional break is confirmed. If Tokyo bounces from here, the market testing the exhaustion. Japan's stalling conviction is the execution risk for Seoul. Watch Tokyo's opening volume. If light institutions are leaving, if heavy institutions are buying dips. Korean futures implied up 207 base point. Is Seoul's trapped conviction? Korea held aggressive positioning through day 3. That's either conviction or trapped long. If Seoul opens and the bid evaporates, Korea was trapped. If Seoul opens and stabilizes Tokyo's weakness, Korea's conviction pulled the region through exhaustion. Korea is the pivot. Watch Seoul's opening volatility. Shanghai Composite futures implied flat at plus 1 base points. Is China's capitalization? Shanghai is at 0. If Shanghai opens and extends lower, China's selling confirms regional breakdown. If Shanghai opens and bounces, China's light bid was strategic entry point. Australian futures implied up 9 base points. Australia holds minimal conviction. Crude oil selling 41 base points. Must stabilize for Australia to hold. Watch crude momentum. If crude extends lower, Australian weakness become contagion signal that spreads. That's signals watch pivot point. The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am Jay. See you in market.